Great, thank you, Cheryl. Well, a new survey by the Federal Reserve Bank of New York shows inflation expectations remain near their lowest levels in years. So why is the Fed still expected to raise interest rates during its meeting this week? Let's ask John Petrides of Point of View Wealth Management. John, nice to see you.
Thanks for having me on.
All right, so, we're expecting the Fed to make that increase of about a quarter of a percentage point, but inflation's on pace to be below that 2% mark. Again, looks like the sixth year in a row. So what is the argument that the Fed will make if it does go ahead and raise rates?
Well, the Fed is in a Goldilocks situation here where the economy is growing not too fast and not too slow, and it's pulling the economy out of crisis-level policy. The Fed's ecstatic that is what happened this year. I mean, they entered 2017 looking to raise interest rates 3 times, and they were able to do that with volatility in the stock market at all-time lows. So this has helped bridge the credibility gap that the Fed has had because they have had to adjust their dot plot and move their expectations for interest rate hikes for several years now.
One of the concerns, of course, is if there were to be a downturn, where the Fed could go when it comes to interest rates. But some economists say that inflation really won't be a problem for years. What are your thoughts?
Well, I think what your listeners and what investors need to focus on in terms of inflation is the first Friday of every month is the monthly jobs data. And that's when the wage rate data is produced. So that's the key data point that the Fed is looking at. If we start to see wage rates start to creep up, that's what's going to force the Fed's hand to increase rates faster. And with the economy and the labor market so tight, investors have been perplexed that wage growth has not moved higher than it already has.
So I want to turn to this. The Wall Street Journal has a story today that says that basically Amazon is complicating the Fed's decision because of people who are comparison shopping, using the internet and being able to look at it, using technology, and that's keeping inflation down because prices are staying down. The Fed Reserve Bank of Dallas's president calls that a headwind. What are your thoughts?
Well, I think technology in general, not just Amazon, has made the overall economy more efficient. The use of big data analytics, the use of smartphones, it's not just the consumer, it's business in general. Again, post the crisis, are trying to do more with less, and they're trying to maximize their margins, their profit margins, as best as possible. So, I think technology has always been an issue, but I don't think it's the driving force here in keeping inflation down.
All right. John Petrides, thank you.
Thanks for having me on.